everyone, welcome back to this week Weekly Market Update. Hopefully you guys have enjoyed your week, and this week video will be a slightly shorter one, basically just to give you a quick update what is happening on the major indices, things to watch out for next week, and also uh, just to recap some of the counter that we have been going through, and also to take note that most of the counter that you will be, if let's say you have your own watch list, you should see that most of the counters, whether it's big cap or mid cap, right, is actually rebounding back, because we know that previously the market has been rebounding back. It's actually rebounding back to the 100-day moving average. I won't be going to individual, but I believe you open a chart, put in your 100 days moving average indicator, you can see that it's actually at the resistance at this level. So just be careful if let's say you're not sure where is the market heading to, because last Friday we have seen that the market actually actually dropped, snapped the 4-week long rally in the S&P, right? So take a look, input a 100-day moving average, see that is it whether touch the resistance and rebounds back, and that what causes the market to come down. So last Friday, both three indices slide. I think Nasdaq actually the one that slides the most, dropped almost 2%, 2.01%. So for the week itself, right, S&P 1.21% lower, down 0.16% lower, Nasdaq 2.6 lower. Main reason is because, right, when we next week, I believe there's a Jackson Hole meeting. All right, I think it's the Fed. We can see that next week, yes, there's a meeting for Powell to talk about what is happening on the September rate hike, correct, on the September rate hike. So rate hike, I think there's a couple of actually people came out to talk about they may see that 75 basis point rate hike will be continue because inflation rate is still there. After all, they need to bring it down, right? So that resulted that Nasdaq is the highest to drop because they are more sensitive, technology are more sensitive to the increase of the rate itself, and that is why Nasdaq closed 2.6% lower. All right, so not much big deal, but just in case you are in the big buff and beyond, unfortunately, I think there's some bad news over there. It's being pumped and dumped at the moment, so the market actually dropped crazily. Hopefully, no one's actually get trapped by it on this news, this counter as well. All right, so let's go to okay, one more thing. One more thing, we can see that how do you actually see the market is not doing good, right? Because like I say before I start earlier, I mean in this at the start of the video, I say that most of the counter actually reached the 100-day moving average, right? I will show you some counter, show you some picture later from the charting. That is why, right, when you scroll down, there's one also indicator. You can see that the decline issue outnumber the advanced ones in NYSE 6-to-1 ratio, meaning to say more stocks is dropping that the more stocks is going up. So if more stock is dropping, eventually the index will drop, right? That is why index came down. But that also say that because usually if let's say it's the big stocks that actually come down, all right, it might be the one that actually move the index itself. But if let's say it's more shares come down, it's depending what is the how the index is being built. All right, whether it's price weighted, or whether it's, I think I can't remember the terms of it, but you guys can Google lah. So ultimately, more shares has declined than the shares has advancing lah. All right, so let's see. This is also one new, just to let you guys know. Starting of 2023, there will be a 1% tax for stocks buyback. All right, for stocks buyback, you can see that this year especially, there's a lot of many companies got excess cash. They'll be buying their own shares because the shares has dropped crazily low. I think it's value picking. The company is value picking. They're buying back. So subsequently, going forward in 2023, right at the beginning, if let's say they are going to buy back, there will be a 1% exercise tax on this practice. So meaning to say, right, if before the start of 2023, you can see that more company might or announce more buyback. So I think one of the company that actually said, yes, is GM, General Motor. On Friday, it will resume its boost shares purchase up to 5 billion. All right, up 3.3 billion previously left from the programs. So another one is Home Depot, announced a 15 million shares buyback program. So there were experts see that predict company would accelerate the tax-free stock buyback in this year before next year going to be more tax on it. All right, meaning to say, buyback of shares might actually bring up the shares price. So we shall see how does it impact on the economy as well. So let's go into the chart. For the chart itself, we can see that on Dow Jones, right, this is what we predict last week, right? We mentioned that next resistance is the 34K, coincide with 200-day moving rate average, and also coincide with 61.8% Fibonacci level. Can you see? All right, hopefully you guys see that, huh? So this is 5, 4, 3, 2, 1. We predict of Monday itself go up, Tuesday it touch, close below. So if let's say you believe on this strategy, you put a small short over here with your stop loss above, I think you can have at least right around 300, 400 point. And right now it's trading below the 200-day moving average. So just now I take a glance, most of the counter is actually like at the downside. I foresee that for the coming week, the downside may resume. All right, the first resistance level we shall see, which is 33,300, which used to be our previous resistance, turn support. All right, so we can actually have some quick update over here. So 20th August 2022, next support at 33,000, followed by 33K. Try up previous. This is previous support, previous resistance, turn support. All right, so this is why I look at it for next week. Okay, so I might not be accurate, guys. It's just how you manage the risk. Everyone know how to read the chart, but it's just that how you manage the risk. Okay, so this is what I will be looking at next week, and few other stuff. For Australia index. Okay, just open any one of it. We can see that right now, like I say, right, it touches the 100-day, 200 days. This is touches the 200-day moving average and some engulfing candles. So if let's say here will be the resistance, okay, used to be support, resistance, support, 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 support. Okay, so I just put around this level 7,001 or what. Then this is what we are looking at if let's say the major economy is coming down. Okay, I'm not going below 6,009, I guess. I'm not going below 6,009. Okay, that will be my support here. Okay, so this is what I'm looking at. So let's take a look. 20th August 2022. So support 6,009. Of course, this is a flash down. I mean flush down. Support at 6,009. Resistance, we can say 7,150, coincide with 200 days moving average. Okay, so people who are in Australia index, just watch out. Okay, take a look. Okay, next counter we are looking at is actually on, I think it's FTSE. If I'm not wrong, let's take a look. Which one should I use? What should I do this? Okay, this is FTSE. I mean, it's similar. Okay, guys, just go and take a look. I can't remember what is the exact counter. I don't really trade, but I just take a glance what is the index is doing. So we can see that we are right now at the upper tier. Okay, we are right now at the upper tier. So people who want to be more risk averse, there are a couple of ways which I always mention. Either a fake breakdown come down, either nearer. All right, of course, if we continue go higher, we should ride the trend right until it break the trend. Correct? Until you break the trend, then you shut it down. So right now, up to individual how you derive from here. Okay, how you derive from here. So if you want, you're already short term, you can do this. Okay, any break is for you to enter the short. Anyway, we are at the high top. Okay, trading on the range itself, we are almost at the top. So just want to put one line here. Okay, break, we can go short. Okay, that's for FTSE. Next counter, BTCUSD, Bitcoin. Wow, Bitcoin, epic move. All right. So remember last week I said that next target will be 28,000. Used to be previous support provided. All right, guys, provided right here. Break and close above 25,000. Can you see last week? All right, 5-4. I mean, it's trading. Okay, so it is on the 14. Okay, on the 14th, is over the weekend, right? So it's trading, it touches, but it never break above. Can you see it closed below? It touches, it closed below. So people who actually put a stop entry buying on the breakout, hopefully you cut, hopefully you cut. All right, by right, we need to wait until the close candle above it. So since 25,000 did not break, this used to be previous support, turn resistance, and then it came down. All right, that is why be cautious. Previous support, previous resistance line is kind of like significant as well. All right, coincide with this 100-day moving average. If you look at it, correct? 100-day moving average coincide with the previous support level. Okay, so where are we looking at? Definitely back to 20,000, or the last I think is 18,000 if I remember correctly. 18,000, 20 or 80,000. All right, 20 or 80,000. If we break below that, then it will be very ugly for Bitcoin. Same goes to Ethereum, gentlemen. Not going through the chart. Okay, let me see. Sorry guys, where's my mouse? All right, next counter today we are going to take a look is actually on the, like I say, most of counter, right? So let's assuming Amazon. All right, can you see? This is on the 200-day, 100 days, 200-day moving average. So most of the counter is actually at this area. All right, most of the counter, all the big shares, Nvidia. This is chips maker, guys. 100 days. You saw that? That's why the sentiment is not that really good on the upside. I mean it's up to how you derive it. If let's say your trading plan is for next week, it's not really that good for next week itself. So if let's say you are slightly longer terms, then you can turn to really chart. All right. So this also touched the previous support, resistance, break, come down, touch. All right, it's being resisted by $100. All right, so a lot of charts is showing this sign. That's why I'm not going to stop pick any counter today. Basically just update on the index itself. So let's take a look for one more counter. Is plug. I've mentioned this right last week. I mentioned this. Since don't know when. All right. But the thing is that also in my private Telegram group, I can show you guys in a private Telegram group. If you are inside, you should know by yourself. I mentioned a short position to be taken at 29 market. All right, 29 market. I think it's here, somewhere here. They come up. All right, go down. So people who are actually in this counter last week, in my private Telegram group, congratulations. It's just a small profit. I think it's because the whole major economy came down, and that is why we are looking at. So I think I given the profit target, but since you are over here, I'm looking at it to bounce back here first, significant level, before we determine where is the next level. Okay, where is this is around 22, 23. All right, 22, 23. We shall put here 20 August TP 22, 23, 23. I guess it's 23 better. All right, watch out for next move. Okay, so this is what I'm looking at. Alright, so that's all for this week winning market update. Like I mentioned, it's just a short one to let you guys know. Oh, one last thing. Hopefully you have not off. One last thing, just to have an update also for gold. Gold isn't performing very well. I break the support level 1070 and 60, and right now look at a bigger view perspective. We may see after the engulfing, we may see 1670 come to the next play again. Alright, we may see here. So next week we might see some drop. Okay, I'm not going to remove my resistance support. I have dropped. I think it's significant level. I will just leave it there. You just play with the range. All right. Actually, it's kind of like very not that easy lah. I don't say easy, but it's kind of like simple move indicator which I plot previously. Can you see that the gold actually touches close the 38.2%? All right. Can you guys see this? 38.2%, this level. So you see that the thing is that when the gold, right, you are actually long at the bottom. When the gold near 38.2%, it's actually a sign for you to watch out. People who are greedy, by all means, but it's either you partially take profit or you move your stop loss higher. Don't profit turn losses or give out your profit. You get what I'm trying to say or not? All right. Hopefully you understand. If not, drop me a mail. I will then explain to you more on the risk management itself. Okay, that's all for this week winning market update. Enjoy your weekend, everyone. Goodbye.